This video is going to walk us through making adjusting journal entries and then posting them to the T accounts and then making an adjusted trial balance to make sure that we're in balance and then preparing the financial statements. Okay, so first off we have a trial balance. This is before we make adjustments. Alright, so in A, it says insurance that expired during December amounted to $40. And it's always for the amount that has expired. So let's go make that journal entry. Alright, and let's make the journal entry. So it's going to be a debit to insurance expense because it's always to insurance expense if we use it up for $40. And then we're going to take it out of the asset account, prepaid insurance, because we've used it up. And I'm going to go ahead and post this to the T account. Okay, so in our T account, we are going to debit insurance expense for $40, and then we're going to credit our prepaid insurance. So it did have a balance of $40. Now, when we credit it it had a balance of $240. Now, when we credit it for $40, it has a balance of $200. Okay, on letter B, office supplies on hand on December 31st totaled $75. Notice that here it's giving us the balance in supplies is $75. They didn't tell me how much I used up. They're now telling me how much I have on hand. Okay, so let's see how much I had. I had 180 and now I have 75. So that means that to get from 180 to 75, I must have used up $105 of supplies. Because I have 180 in there and now I just have 75, so that must mean that I've used 105. Okay, so I've used up 105, so I need to debit supplies expense for 105. And then I need to reduce our asset supplies, so I credit it for 105. Now let's go see what that does to our T account. So we're going to post to office supplies expense in the debit for 105 and then credit office supplies for 105. And notice that I had 180 minus 105. That gets me to my new balance of 75. Depreciation for December totaled $100. So we always do the same thing. We debit depreciation expense and we credit accumulated depreciation. And notice that it's just like the adjusting entries, but we don't, instead of crediting equipment, we never credit equipment. We always credit accumulated depreciation. We leave the asset at its original cost and instead we reduce the value through accumulated depreciation. This is accumulated depreciation is a contra asset account. Okay, and then we're going to go to depreciation expense, office equipment, and then go to accumulated depreciation. Should be over here. Should always be on the right side. Okay, so these accounts here will always be looked at together. If you ever want to know the book value, look at the balance in office equipment and subtract out the balance in accumulated depreciation. You can see that these two accounts have opposite balances. Office equipment has a normal debit balance and accumulated depreciation has the opposite. It has a normal credit balance. Letter D, accrued wages on December 31st totaled $120. Accrual means either a receivable or a payable. Since wages are an expense, we're talking about a payable. So debit wages expense and credit wages payable for $120. I'm making this adjustment because I owe the employees, and I haven't paid them. And I need to show that they've earned this and that I owe them on the financial statements. Okay, wages expense, $120, and wages payable for $120. Letter E says revenues earned for services performed in December but not billed by the end of the month total $300. So have we earned them? Yes. Have we gotten the money? No. So we're talking about accrued revenue. So we will debit accounts receivable and we will, let's see, $300, and we will credit fees earned because we've earned it. So debit accounts receivable and credit your revenue. So, okay, I've been calling it fees earned, but it's actually answering service revenue, so we will fix that. Letter F, revenues received in advance of services still to be performed total $300 at the end of the year. So have we done the work? No, not yet, so we need to defer it. So where do we defer it to? We defer it to into an unearned. So we've already done that. So let me show you, because we're in the adjusting process, let me show you what that entry looked like. Okay, so when we did that entry, we debited cash because we got cash, and we recorded unearned revenue because we had not earned the revenue yet. We owe them the service. Okay, and so when I did that, I had a balance in unearned revenue of $460. Now they're telling me that the balance is to be formed now is $300. Okay, so what that means is I had $460, but now I need it to be $300. So I need to make an adjusting entry showing that I've earned the revenue of $160. So this is step 2 of a deferral. Okay, so we will debit unearned fees to get it out of unearned, and we will credit answering service revenue. Okay, unearned revenue, which is a liability, so here, and it was for $160, and then F here for answering service revenue for $160. Anytime you update your T accounts, you always need to check and make sure that they're in balance. So to do that, we're going to prepare the adjusted trial balance. So to do that, we need to get each T account balance. Cash has a balance of $21.60, so we don't need to do anything there. Accounts receivable has a balance of $15.50. Office supplies, we're going to subtract. Anytime you have a debit and a credit, you subtract, and the balance goes on the larger side, which should be the normal balance. Let's see here. Prepaid insurance, office equipment. Here we have, well, we can do that one in our head, but you can just use Excel to add it for you. We have a balance here, and then here we would subtract Our revenue has about 300, wages payable, capital, withdrawals, and then add these three together. Oops. And answering service revenue has $33.60. Office supplies expense and depreciation expense don't have anything to do. Okay, so I went through and highlighted the balances so that I can copy these balances on my adjusted trial balance. So I'm going to take these balances and I'm going to put them on the correct side, the debit or the credit side, depending on where the balance is on my trial balance. Okay, so when you enter the balances on the correct side, they should balance, and you can see here that they do. And just to show you, you can enter equal sum parenthesis, and then just highlight the cells that you want to sum and close the parenthesis, press enter. Once you're in balance, then it's time to prepare your financial statements. Okay, so I would pause it and prepare the financial statement on your own, because if you were in class, this would be homework, and then we can check it together. Okay, so I listed my revenue, I listed my expenses, I totaled my expenses, and then I said net income minus expenses to get, revenue minus expenses to get my net income. Remember, all of this is coming from our adjusted trial balance. Beginning capital came from the trial balance for owner's equity, and then I added the net income, and the net income number came straight from the income statement, and then I've subtracted out withdrawals, and I got my ending capital. Okay, for my balance sheet, I listed all of my assets and totaled them up, including my accumulated depreciation, which is a contra asset, which will be subtracted to get my total assets. Then I listed all my liabilities from the trial balance, and I totaled them up to get total liabilities of $1120. Then I got my owner's equity, and it came straight from my statement of owner's equity, and I listed it right here. And then I totaled my liabilities and my equity and made sure that my total assets equal my total liability and owner's equity. Let me know if you have any questions.